This is The Golden Rule with David Fischer. For the latest information about bail-ins, bailouts, the economic collapse, and much more, go to landmarkgold.com.
Well, hello, this is David Fischer from The Golden Rule. I'm CEO of Landmark Capital, and you're listening to Podcast 31. We've been talking in Podcast 29, 30, and now 31. These three kind of go together, so make sure you listen to 29 and 30. That will lay the foundation on why we're talking about 31. But just to kind of give you a heads up, we've been talking about the Consumer Financial Protection Bureau, what it is, the historical massive sell-off of treasuries, which we'll touch base on today real quickly, and the Dodd-Frank Act. So that gives all the legality, and in fact, I got a white paper. I'll do a quick commercial, 30-second commercial. We got a big white paper that just came off the press. It's the 6th edition of the coming bail-in. It gives all the new data, very in-depth report on this, on the Dodd-Frank Act and the Consumer Financial Protection Bureau. You'll be shocked how much power the CFPB has. It's just like the Federal Reserve. In fact, that's where it's housed, gets its funding. It's an independent agency. So there's an in-depth report that I put together on that. Call my company. You'll get it for free, 877-448-2646. It'll talk to you about how this is all tied into the bail-in, which we've been talking about. And I gathered the data from a very in-depth research report, political and financial, from Fox News. So it's very reliable. And you'll be startled just like I was. All right, let's get on to our topic. So we've been hearing about President Trump, and I'm a Trump supporter. I don't like everything he says, but I like the direction he's taking our country. So let's get that out of the way. So I'm not Trump bashing today. But the numbers aren't going to add up, is what is happening here. He wants to spend $54 billion increase in the defense spending. He wants to pass the infrastructure spending bill, $1 trillion. What's happening is the numbers don't add up. I mean, if we look at just not what I'm saying, but like, how about the Centrist Policy Center? They are the ones that evaluate Clinton's and Trump's tax plans, and also the think tank out of Washington called the Tax Foundation. They've been scoring tax plans for years, so they're not new to this either. But there's another group called Moody's Analytics, a Wall Street research firm, who has very well-respected prominent economist Mark Zandi on the board there, and another Washington think tank, the Committee for Responsible Federal Budget, which is very hawkish on deficits. All four, and there's a few others out there, did an in-depth analysis on the dynamics of this and gave them scoring assessments. But all four groups concluded that Trump's tax plan would fail to pay for itself. The projected deficits range from $2.6 trillion, the ones that are the most optimistic, which come from the Tax Foundation, to more than $10 trillion, which is Moody's. And one of the entities actually said there's a $12 trillion difference between what Trump is proposing and what the Republican tax plan is proposing. So all that said, we're on a spending spree, which brings us to the topic today of what in the world is the Treasury thinking? Well, of course we know what they're thinking. The government overspends. The Treasury needs to create a Treasury bill. That gets sold in auction. Investors buy it, typically foreign central banks. They buy it, they hold it, they sit on it. We pay them in interest. Usually they roll it over. Congress is out of reality. They're not doing their job. They haven't been for quite some time. They need to start setting very strict fiscal responsibilities so that the U.S. government is not going to default and not also have a major problem down the road of us making sure we can create enough treasuries that the foreign central banks will buy them to keep this whole system working. Let's do some numbers here real quick. We have a deficit, a budget deficit, some say as low as $44 billion a month. There's another report that says, no, it's really $75 billion. Either way, that's a lot of money we're overspending. In 2011, there's been a sell-off in the U.S. dollar. That's what started, that's when this new trend started back then, according to the U.S. Treasury. It started gaining momentum, and in 2012, we obviously had a credit downgrade. So maybe the foreign central banks saw the ability to look into the future, that we could not make our budgets and stay within them. Obviously, a downgrade. Second time in history, 2012. The sell-off continued like a hockey stick on a graph, and the most recent report is December 2016. The U.S. Treasury announced that there is the biggest sell-off in the history of our country of U.S. Treasuries, $70.8 billion. Let's put this into perspective here. They're selling our debt. They don't want to hold it. And they've been backing away from buying it. So if we need $44 billion a month or $75 billion a month, whatever number, let's take the lower one. And they're selling $70.8 billion back. And we got to buy that back and pay interest on it. That means we got to create another treasury to pay for that treasury. It's a shell game. And eventually those games come to a brutal end. So if you want to add up some simple numbers, we're at over 112, 115 almost $billion conservatively a month of money that needs to be issued to suffice the repayment of treasuries and the deficit spending. Or maybe it could be higher, like 146 billion. Somewhere in between those numbers. They're big numbers and they're growing, and this is why we're now at a GDP to debt ratio of 106%. So we're going to have a possible challenge here. The Treasury must have interpreted this because recently they made an announcement. Steve Mnuchin, the new Treasury Secretary, said on CNBC here on the 23rd of February that, quote, "It's something we're seriously looking at." What is he talking about? The Treasury is talking about the possibility of issuing a 50 and 100-year bond. Quote, "It's something that we should seriously look at. I've already begun to talk to my staff about looking at that. That's something that makes sense for the Treasury." End quote. Have we lost our mind as a country? If the normal notes are 5-year, 10-year, 20-year, and 30-year, now we're talking about a 50-year and a 100-year? Well, I guess it's not been a new topic. In the April minutes of 2009 meeting that's done by the Treasury Borrowing Advisory Committee, it's a group of professionals from investment funds and banks that offer recommendations to department officials, kind of like recommendations saying, like letters they've been writing to the Treasury saying, we can't keep issuing treasuries to suffice the overspending of our government. Our government congressmen and women need to get their house in order financially. And how about other letters like saying if we don't issue enough treasuries, we could see some major problems for our country moving forward. We need to rethink about this whole debt ceiling, which is a whole other podcast I'm going to talk about in the future. But let's get back to what we're talking about. I'm 55 years old. Let's think about this for a second. Let's put it in simple terms. When I was in grade school and my parents went to the grocery store, back in the old days, they paid paper money for groceries, not a debit card. They pulled out a $5 or $10 bills. When I saw very rarely, a $20 bill, I said to myself, that is a lot of money. A $20 bill, that's a lot of money. 45 years ago. Pretty soon, a $20 bill isn't really nothing now. The $50 bill doesn't really have a whole lot of wow to it either. And neither does the $100 bill. It's not a wow thing like the $20 bill used to be 45 years ago. So what's happened? Obviously, our currency's devalued, and they got to create higher notes. Could it be this is what they're having to do with our treasuries now? The 30-year is not enough because obviously foreigners are selling it at $70.8 billion a month, the last figure, the highest in history. So they got to create a new mousetrap, a 50 or 100-year. Now, the advocates of this say, we need to figure out a better way to manage our debt. So let's do a longer terms with lower interest rates of what happens over those longer terms, where it costs the Treasury less money to refinance it, is what they're doing. That's the thought behind it. Of course, you're going to have to entice the investor paying higher yields in this thing, because who's going to want to hold something for 50 or 100 years? So this idea of long-term debt isn't new. It's been around. In fact, a couple countries of the world do have already done this. Mexico has a 50 and 100-year note. They're doing really good. Belgium, they got one too. They're great. Ireland, they did a bail-in. Obviously, they need money too. So those are your 100-year notes countries, and 50s are Italy, France, Spain, Great Britain. They just did a Brexit. So obviously, no financially fit country like Germany is doing these things. So this correlates and confirms we got a financial problem on our hands as a country. That's what this says. They got to create more incentive for foreigners to buy our debt. The total Treasury market is just shy of $14 trillion of marketable debt. This is going to pose a risk when issuing long-dated securities, because any pullback in demand could cost taxpayers millions and millions of dollars. Michael Colarity, head of the U.S. interest rate strategy at a primary dealer of RCB Capital Markets, comments on this and says issuing a 50-year is much scarier than any other maturities. The U.S. has so much debt, you have to issue a ton of it, and it's going to be messy. So I guess the guy on the inside saying this should hold a lot of weight. Other people are going on to say that we need to be very cautious. And at the beginning of the size of the issuance, in other words, how much are we going to put out there? Because there's no guarantee of a demand for this. And, imagine them issuing it, needing the money, and then it doesn't sell in auction. But they got to be indexed, what most people feel. Because if you look at indexed maturities before, and we have what's going on now in this environment, let's draw some conclusions here. If it's not an indexed Treasury, inflation indexed Treasury, then they're going to have some major problems of people that really want to buy it, and the ones that don't understand it, that buy it, could see a massive loss of money. Because if we go back and look at the last 100 years and follow in the same path, because the 5 and the 10-year and the 30 bonds, they're all inflation indexed, okay? Which, seem to be sufficient for market demand. The problem is that the demand is pulled back, people wanting them, foreign citizens, foreign central banks, But if they choose not to index this 50 or 100 year, let's use 100 as an example, and we look at what's happened in the last 100 years, and that's the same in the future, because the prices rose 200% in the last 100 years, which would mean the person investing in a 100-year bond, for every dollar they invest, it would be worth a half of a penny in a century. So it's got to be indexed to inflation. If not, we're being deceived by this new Treasury Secretary. And he is doing the same thing in that office that he did when he foreclosed on homes. Where does this all lead to? Well, in my closing, it leads simple. Somebody has to hold the U.S. dollar. If foreigners, being historically over a 40-year period of time, been the ones that have been holding it, and since 2011 they've been backing away from holding it and selling them, central banks are the ones I'm referring to, the biggest buyer of treasuries. Somebody has to step up to the pump. The Fed has stepped up to the pump. They only used to have $500 million in treasuries. Now they got 5 million. Or 5 trillion, get my numbers right. 4.5 trillion to be exact. So they went from $500 million to buying 4 more trillion more from 2009 until about 2012. I don't know if they're going to buy anymore because it doesn't look like it's happening. So where does the money come from? Well, there's $18 trillion right now in retirements. IRAs, 401ks. And this is where the government has looked at bailing into them. This would solve all the Treasury needs. Support the dollar, get the debt paid down a little bit. They would create and follow the footsteps of the thing that they've been talking about, create the mechanism, a government retirement annuity. So get this white paper, read up about it. You'll see how it all fits in. The Coming Bail-In, the new 6th edition. You can call my company at 877-448-2646 or landmarkgold.com. Let me read that to you again. 877-448-2646 or landmarkgold.com. So until then, diversify, get your money protected in physical gold and silver. We can help you do that. I've been doing this for close to 24 years now. I know a lot about the markets and where we're headed. We're going to have a major bull market in gold, a major bull market in stocks. But gold and silver are outperforming stocks about a 2-to-1 ratio. So call my company and get some of the facts. And until next time, this is David Fischer, CEO of Landmark Capital, The Golden Rule, podcast number 31.
This has been another installment of The Golden Rule with David Fischer. To stay up to date and find out the latest information, go to landmarkgold.com.
And 30, that will lay the foundation on why we're talking about 31. But just to kind of give you a heads up, we've been talking about the Consumer Financial Protection Bureau, what it is, the historical massive sell-off of treasuries, which we'll touch base on today real quickly, and the Dodd-Frank. Well, hello, this is David Fischer from The Golden Rule. I'm CEO of Landmark Capital, and you're listening to Podcast 31. You know, we've been talking in Podcast 29, 30, and now 31. These three kind of go together, so make sure you listen to 20 Protection Bureau. You'll be shocked how much power the CFPB has. It's just like the Federal Reserve. In fact, that's where it's housed, gets its funding. It's an independent agency. So there's an in-depth report that I put together on that. Call my company. You'll get it for free, 877 Act. So that gives all the legality. And in fact, I got a white paper. I'll do a quick commercial, 30-second commercial. We got a big white paper that just came off the press. It's the 6th edition of the coming bail-in. It gives all the new data, very in-depth report on this, on the Dodd-Frank Act and the Consumer Financial Protection.
This is The Golden Rule with David Fischer. For the latest information about bail-ins, bailouts, the economic collapse, and much more, go to landmarkgold.com.